All right, I'm gonna try this again. The last time I couldn't really hear myself, so going to see if this is better. Just gonna wait for my team again, Morris, Lori, to join. We have a really great topic for you guys tonight, and it's talking about homebuyer myths. So things that homebuyers believe to be true and gives them pause or hesitation when purchasing a home. So we're going to talk about those things and debunk those myths today to make you less afraid to start the process of purchasing a home. So hopefully you guys find tonight informational. All right, so here's Lori. We're going to bring her on. Hi, Lori. Are you on the beach? Hello?
Can you hear me?
Yeah, not really. I don't know. Something's going on with my my speaker.
Okay.
So I'm not hearing too well, but you're here, so that's cool. Let's see if I can put my earbud in. Okay, I
It
put my
might be loud
earbud
on
in.
my
That's
end too
better.
a little bit.
Yeah, okay, here's Morris. Let me get him in here and
Okay.
we'll keep
Dang, I
it
hate I can't
going.
see y'all. That makes me so mad.
Oh gosh. Well, we can see you and I'm jealous. It looks beautiful. I'm so jealous.
Thank
All right, the
you.
gang's all here.
Right.
Great. All
So
right, so I was just telling everybody this is our live, Thursday live, and tonight we have a really great topic. We're talking about home buyer myths, things that home buyers believe to be true that gives them pause or hesitation with going forward and purchasing a home. So we're going to talk about those items today and hopefully take somebody out of the scared zone and get them ready to buy a house.
All right, cool. Can you hear me?
Yeah, I can hear the waves loud and clear.
Sorry, guys.
All
All right,
right.
people are asking how to jump on. Goodness, let me invite some people.
Hey Z. Hey Kenya.
Hey Z, hey Kenya.
All right. So let's talk about that.
uh,
Go ahead, Morris.
tell Laura to quiet those waves down.
Ah, I need to mute.
Yeah,
It's too
look,
loud.
the waves loud as I don't know what. Hey man,
Ah,
we
okay.
excited today. We got a good topic today, y'all. I'm gonna drop our link in the chat. This is our home in 30 days link. So we put together a group where we share information, straight home buying and selling information, tips, advice in a non-threatening way. And we just want to provide you with information. So we do have special guests at times that we bring on to talk about different topics outside of just buying and selling, because it's more to life than just buying and selling. You got to have your mental right, your health right, your finances right. All of that goes into play. So we try to provide a little touch of all of that. So I just put in the chat, I'm sorry, our home in 30 days group. Go ahead and click on that link and click the invite button, and we will add you to the group. In that group, you'll get videos that we post like this, and the ones that we post for our members that's in the group only. So it's like private access. All right. So just
Mhm.
wanted to throw that out there. But
And
go
also
ahead,
like and
DJ.
subscribe to our YouTube page, y'all. Like, support us.
Hmm.
Go in there and just hit that like button for us.
That's what's up. That's what's up.
Home in 30
So we talk.
days. Type in home in 30 days, Morris Wyatt, and it will pull up.
That's right. So we're talking about myths, and that's a good thing because I just had a good conversation with someone about that topic, and her myth was that she needed to pay off all of her debt before she can purchase. So just want to kind of debunk that. What's you all's thoughts on that, Laura and BJ?
I don't think you have to pay off all your debt. That's why we always advise you talk to your lender, because they will advise you on what you need to pay and an
Yep.
exact amount that you need to pay. So all of your debt doesn't need to be wiped away, because they want to see some debt, right? Like, it's crazy, but they got to see some debt to see how you manage and pay that debt, to know how you're going to manage and pay this loan back. So that's really important.
Yes, and another thing is they like to see longevity. So don't close any of your accounts that's been open for a long time, because that's going to hit your credit in a negative way. So don't close any accounts, and really just keeping it within that 30% utilization of what your cars are. So if you have a balance of $1,000, I mean not a balance, but if you have a credit limit of $1,000, you don't need to spend no more than 300 on that car to keep it in a positive light every month.
That's it. That's it. So that was exactly the conversation that I had with the young lady. She was so excited to tell me that she wanted to pay off all of her cars, but fortunately, she was able to consult with me, and I advised her not to do that for the reasons what you all just said. Because think about it like this: you got $1,000. If I only have to pay the 300, now I got 700 that I can make some moves with, right? And so what we're trying to do is just get you credit worthy. Now, after that, you can go pay off everything. You can go do your thing, whatever you want. But we just want to get you credit worthy, and for you to be able to utilize your cash in the best way as possible. And we're going to talk about some other myths when it comes around cash. So I won't really go into that right now, but you will need some money to purchase a house. But going to the next topic, you all, most people believe you need 20% to buy a house. So what's your thoughts?
So that's not true. That's false as well. Because, with FHA, you need 3.5% down to purchase a house. And with conventional, you need 3% if you're a first time home buyer, and then up to 5% if you've purchased the home before. So that's nowhere near 20%.
Mm-hmm.
And then if you get into a special financing, loan where it's 100% financing, then you need absolutely nothing to put down.
Yep. So one of the things that I would say is it kind of depends when because some people may have the cash, right, to put down on the 20%. And it kind of depends. It depends on your strategy. If you're planning to stay in the house for a long time, the 20% may be a good thing, because it's going to allow you to get a better interest rate, a very, very competitive interest rate. And it will take away some of the fees associated with owning, with purchasing a home with a higher loan to value like that. So,
Like, I put down 20% because I was adamant I didn't want to pay PMI. So that was my strategy to save a couple $100 per month. I put that,
right.
20% down.
Yeah. And if you're going to stay in the house for a while, like, that might make sense, because that's going to save you all of those thousands of dollars over that time that you're going to stay there for a long time. If it's one of those people where, like, this is absolutely my first house and I'm going to be gone in 5 years, then maybe let's hold on to that cash, because you're going to use it in another purchase or for something else that can help you make more money in a short period of time, things like that. I wouldn't just save the money to go blow the money. Now, that's not being responsible at all. But if you're going to save it, like pay a 3.5% versus 20, but then with the other money you can be using to invest, to grow the money, to make other moves with, that makes all the sense in the world. So you don't have to have 20%. 20% is great. You're going to get a better rate. You're going to get preferential treatment at the lending office, all of that kind of stuff. You know what I'm saying? But at the same time, you don't have to have it to purchase. And then we didn't even talk about some of the down payment options that we might have, to even help save on that as well. So it's plenty of options, and you don't have to have 20% to purchase a home today.
And be sure too to make sure of the type of loan that you're getting, because like BJ was saying, with her particular loan, she could pay the 20% and not pay the PMI. But some loans, it doesn't matter if you pay the 20% or not, they still don't waive the PMI. So know what type of loan that you're getting as well, to see what would better benefit you with your payments.
Yep. That's true. Yep. Good point. So another myth, the asking price is the price I have to pay. Now, I have two angles when it comes to that. Because that kind of depends on the market. It kind of depends on the house that you fall in love with, you know. Um, it's factors, meaning that true, um, if you don't ask, you don't get. So if you ask, if you want something for cheaper, you better ask for it, because if you don't ask for it, you're definitely not gonna get it, right? But you got to also be strategic in how you do that. And so, um, what I so I'll explain it like this: if we're in a situation where I take you to a home, or I take someone to a home that we've already been shopping in that market, so we know what things cost, right? Like, we know this home is 400,000 all day. We've been looking at houses that look worse than this for 400. If the property has been sitting for a longer time, then maybe it may be a reason that it's not selling. But if you want to win that house, my position is give your best offer. I always tell my clients, give your best offer, so that if we don't win, you feel like you've given it your all, and that you don't come back saying, well, dog, I would have paid 5,000 more, or I would have paid 2,000 more, or you see what I'm saying? Like, don't play around in this market, because I've been with buyers that wanted to haggle, and they got the house taken right up, from up under them. So the price, it doesn't necessarily have to be the price, but it is going to be depending on the situation of the property, your situation, how much you love the house. Because if somebody loves the house, the value is different. Think about that. Think about if you work, live, and play in an area, and you got the opportunity to live in that area. You may pay a little bit more for that, because it's gonna save on my gas, my time, and all of this kind of stuff, right? So it's the same thing. It's just gonna kind of depend when it comes to that. What are your thoughts on that?
I mean, that makes sense to me as well. I actually have, and sometimes take into consideration, some people just be so involved in, let me get the lowest price, let me just try to get a steal, let me try this, because they can miss out. We've had a client, a few clients, but we had one particular client. It was a really nice house in a small subdivision, fully brick house, 3 levels. I mean, and they were asking for, that they had went down on the price, and they still was trying to haggle with the price and being very indecisive. And then they ended up missing out on the house, and they had very minor repairs that needed to be done to it. And somebody an investor ended up buying the house and then priced it for 100,000 more.
Mm.
So it's like, you do all that haggle when, if you see it's a good deal, you can make a good deal out of it. Don't just try to beat somebody out of something, because it's other people out here who want it too, who see that it's
Yeah,
a good deal.
yeah,
So you just have to be open about that. Like, you're not the only one that's looking at that house.
right. And I always, yeah, but that's a excellent point. When it comes to that, just being competitive when it's time. So this is what I mean by that. Like, in this market, don't play around. Like, we will. I know everybody likes to win. Everybody likes to win. Nobody wants to lose or feel like they've been taken advantage of. I get it. Now, I mean, everybody's like that, right? And so, but it's other ways that you can get what you want and make everybody else happy as well, without it just being the sales price. So, for example, when I advise my clients, I say, hey, let's go ahead and get through the due diligence process, the period of us allowing us to inspect the property, right? Let's get through that, because it may be things during that inspection that are way more important than the price of the home. Because we could be getting a pretty decent price, but then it has $10,000, $15,000 worth of work that needs to be done to the property. What's more important, dropping the sales price so you only save $50 a month from that reduction, or getting $10,000 covered by the seller so you can pay for those things and live comfortably as soon as you move in? What's going to be more important to you? You see what I'm
And
saying?
I'll go
So it's
with this
gonna.
angle. Oh, go ahead.
Mhm.
Oh,
Go
and
ahead.
then the
No,
other
I was just that's
angle
how I was summing
is,
up.
you know, even though that's the price of the house, you're not going to pay more than what the appraisal says that the house is worth anyway. So if that
Yep.
seller has that home overpriced and the bank says, hey, this house isn't worth 220,000, it's worth 215, then you got to go
Mm-hmm.
back and negotiate anyway, because you're not going to be able to get financing for that house at 220.
Mm-hmm.
So, you know, that
Yep.
price of the house isn't the bottom line. So there's
That's
lots of
right. That's right.
scenarios, like you said. It's really going to depend on the market, and you know, each situation is going to be a little bit different.
Mm-hmm. And what we do as you know, a service that we provide, we have contingencies in our offer, right? So we make sure that we are protected by what we call a appraisal contingency, and it just basically says that we're not going to pay more than what the home appraises for, right? And so that helps to protect us in the event we put in an offer. Let's just use the example of 300 and come back at 310. We're not obligated to pay the 310, but the seller is not obligated to sell for less either. So we can either renegotiate, or the seller can adjust the price and so forth. So a lot of, like you said, it's a lot of variables when it comes to price. We understand that everybody likes to win. When we represent our buyers, we're representing our buyers to the fullest in terms of trying to get the maximum, the most amount of savings, but value, right? And so we kind of talk through that to see what is best for our clients depending on the house, because it's going to be different for the house and the person. Let's see what else we got here. Zillow or online estimates are always accurate.
That's a
That's
really
funny.
good one.
Yeah, I know y'all got
Zillow said
examples
my
Yes.
on
house is
those.
worth 500,000. No,
Yes.
baby, your
Yeah.
house is
Please,
worth three hundred
please bust
thousand.
that one. Please bust it.
So I don't think, you
Yeah.
know, Zillow and all those online, they don't take into account, like, some houses may have been short sale, they may have been a foreclosure, they may not, you know, when you're doing a CMA, you want to compare apples to apples, right? So you want to compare a 4-bedroom house with a 3, you know, 2.5 bathroom, 2-car garage to something of similar value. So they may be comparing or getting that number from houses with different number of bedrooms, different number of bathrooms. One might have a basement, you know, one might have a 2-car garage. So the numbers are a little bit skewed with those online sites.
Mm-hmm. Yeah.
Your best bet is to get with a real estate agent, preferably me, Morris and
Mm-hmm.
Lori, and let us run a CMA for you to get
Mm-hmm.
some real numbers.
Yep. Yeah. Yeah. It's just not accurate. That's why if you go on Zillow, Realtor, Redfin, any of those sites, you're probably going to get 3 different numbers. Zillow going to tell you something, Redfin going to tell you something, because they're going off of formulas, calculated formulas that they've preset to generate the value, and that's so high level. I mean, that's literally high level comparison when it comes down to trying to really, really get granular to your specific property. And they try their best, and sometimes they hit, sometimes they're off. You know what I'm saying? Benjine just hit it on the head. Get a professional to really evaluate your house, and a good professional, not just one that's going to go into our databases and put in your address and hit enter and then spit out a pretty report and put it in your face. That's not necessarily telling you what your house is going to sell for tomorrow. But if somebody can explain the market and the reason why the house next to you sold so less was because it was a divorce sale. They just wanted to separate, so they didn't care about profit. They just needed to sell the house. Or the house caught on fire next door, and the person totally renovated the house. So it is going to sell a little bit more than your house that's been dated for 20 years. You get what I'm saying? So it's a lot of different factors that automated system is not going to tell or be able to see. Whereas when we do our homework and research, we're looking at multiple platforms, multiple different sites that we get our information from. We're also looking at everything from pictures to descriptions to private remarks to calling some of the agents that have sold in the area, things like that we're doing to get value and information that we need to help our sellers determine, you know, what their price is and what they can ultimately walk away with. So my advice, don't hold that with a grain of salt. I mean, that thing is, those things can give you a range of idea, but sometimes they can hurt you or help you. You know, don't take it for a word until you get a professional to look at it. Cool. All right. So what we got? I'll wait for the market to crash. I know we got Kenya.
Oh, that's a good one.
Yeah, we got Kenya on. She's our office manager, and she takes a lot of our calls. So she always reports back that she gets people that says that they're gonna be waiting on the market to crash. And so what's y'all thoughts on that? Because when they say that, it's good luck.
I did a buyer presentation a couple weeks ago, and that was a question that the buyer asked me, like, did I think the market was going to crash again? And true, I'm not, I don't have a little crystal ball and I can't predict the future, but I don't think so, in my opinion. I think, when you go back to 2008, when the market crashed, the banks were giving loans to people who had no business qualifying or getting a loan. They were giving them these interest-only payments, these balloon payments, these fluctuating mortgages. 1 month your mortgage is $1,200, then the next month is $2,000. Who can afford that unexpectedly? So I think what happened in 2008 was like a unique situation, and right now, like, getting a loan and getting funding is very rigorous. They require a lot of documentation, checking, your employment, checking funds, and things like that. So I personally don't see something like that happening again, like it did in 2008.
Yeah.
Yeah. I don't believe it'll be to that extent either, because you got to think about back then, people can just say they make this amount of money. They wouldn't get no proof of nothing. People were just writing down, lying that they make this amount of money. And it was so much fraudulent things that were going on that, people was actually losing their homes because they really couldn't afford the homes. And so they put so many things in place now to make sure that that person actually qualifies for the loan.
Yeah. And I agree with you all. I definitely agree. And outside of the fraud that took place in early 2000s that led up to 2008, just think about it like this too, where we are from an equity perspective. Like, this has been a great time for sellers over the past, 3 to 5 years. A great time for sellers because it has held a seller's market pretty much. Right now we kind of balanced, but this is the market we in. But leading into this, we've had a great seller's run. If you purchased before 2000, you won, right? So I definitely think that from an equity perspective, people are sitting different. Think about it like this. Back in 2008, you were buying a $300,000 house that really probably was $150,000. You know what I'm saying? Honestly. But let's just say, even if it was 300, you bought it at 300 and it's worth 300. You see what I'm saying? Where we are now, for a lot of people, they either bought before 2000 and then rode that 2000 wave, 2000 to 2003 wave, 23 wave, and accumulated a lot more equity than they would have just traditionally. So I'm saying all that to say, we're in a different market than we were in 2008, because now if a seller is sitting on $100,000 equity, they're not so tempted to just let that house foreclose. First of all, I'm gonna try to work it out with my bank. Second of all, I'm gonna try to sell this joint so I can get some money from it, right? On a note from that, the lending practices, like you mentioned, Laura, has changed. So right now, as you saw, like during COVID, where banks stepped in to try to delay and prevent foreclosure and economic disaster from, say, the real estate market. So I just think like they have some things in place to help protect. The equity is like sellers are in a much different position than they were back in 2008 when they decided to foreclose. Because think about it, in 2008, some people foreclosed just because they felt like I paid $500,000 for this house, and this guy just moved next door and he only paid $250 for it. No, I gotta go. I'm not gonna pay $500 and he paying $250. Some people literally walked away from their house just because of those type of things. See what I'm saying? So we're not in that same market. So I don't see, I wouldn't foresee a market crash. You may have a uptick in foreclosure because we've lost jobs, things like that. But I don't see a whole sector falling in like it did in '08. That's my view on it.
So keep waiting if you want to, because on average, homes appreciate 3 to 5% per year. So while you waiting
That's
on
right.
this market to crash, you ain't gonna be able to buy a house, baby.
So
Ever.
good point. Good point. So let's just talk through that right quick because I think that's what people need to hear, BJ. So like she just said, okay, that house is $300K today, right? You're gonna sit and wait for the market to crash, and like BJ said, nobody has a crystal ball. So what we waiting on? Like, I mean, the country has already done what they have done with tariffs and unemployment and stuff like that. So what are we waiting on to crash? I don't know. It'll just be one of those things that could possibly happen. Recession, yeah, but crash, I don't know. You know what I'm saying? Like what would make that crash? So I'll say all that to say the house is 300 today. Let's just say, okay, you wait 2 years for it to crash. Or how long is the next presidency? 3 years for it to crash, right? It's going
Actually,
on.
4. He just got in this year. Well, yeah.
Yeah, just got in this year. So now you wait and you have a 3 to 5% increase in equity year after year, right? So now it's not 300 anymore. It's 325, 335, right? So at the end of the day, yeah, the rates went down because the economy is kind of struggling. So they kind of sparking the economy with lower rates, right? But at the same time, the house prices went up. So at the end of the day, when you thought you were gonna pay less than that $2,000 payment, it's still gonna be $2,000 because the house is now 330 with your 5% rate versus 300 with your 6.5% rate. Still gonna be paying the same thing. So don't wait on a crash. What you should do, buy the house today at 300, ride the appreciation for those couple of years. When the rate gets to where you would prefer or want it to be, you have an option to refinance if that's what you want to do. Now you bought the house at the price you want, you accumulated the equity that you need, and now you can lock in a better interest rate than maybe you would have gotten waiting on the crash. Hopefully
Do
that
the
helped
math.
explain anything. Did I miss anything, ladies?
No, it sounds good to me.
My credit has to be perfect to buy a house. How many
False.
times do we hear that?
False.
All the time.
So, what do we need? Okay, so I know I got some of my lender buddies on this live. I'm sure y'all in the house in the building. What they're gonna tell you is they can approve you at 580, right? I've been in the business since 2008. Okay, I haven't seen that a lot. Not to say it's impossible, but I haven't seen that a lot. Get your credit score where you won't have any problems, which is 620 or above. We always say probably go to aim at like 640, so you'll have 20 points to kind of fluctuate during the approval process and during the home buying process. Don't just be at 620 and be satisfied. I would say at least 640. Ideally, you can go to 680 and be even better. But it doesn't take all of that. And you'll still end up probably being around the same interest rate at 640 or 680. So it really doesn't matter in that case. But you might be able to qualify for more loan products at the 680. So now you might be able to get some special type of financing, some special type of down payment assistance, things like that with the 680. But 620, we can get you in a house, no problem. 580 is what lenders say that they can do to work with you. But again, what I've seen is when we send somebody with 580, it turns around that they are getting things worked on before they get pre-approved. So just get your stuff right. What I miss on that, lady?
That sounds really good and accurate. And like, if you know you have some credit issues, start working on those items now. It's a process,
Yep.
because once you start working on your credit, it's not going to miraculously go up 100 points within a couple weeks. Like, it takes months. So if you know you have some credit challenges, start working on them now. And we have a great credit repair specialist. So if you need the info,
Yep.
let us know.
And this is the strategy on that too. Oh, you were gonna say something, Laura?
Yeah, I was going to say the best thing too is to work with a lender because they can tell you exactly.
Mm-hmm.
Because see, it's a mortgage credit score. People don't know
Mm-hmm.
that you have your credit score, but it's a mortgage credit score that they look at. But they can tell you exactly what you need to do.
That's
So
right.
even if we have a credit specialist that can help you as well if it's bad. But if you're like close, if you're 580 or 600, you're just very close, and you just need some, maybe 50 points or so. Might as well just go ahead and get with the lender. He's gonna tell you exactly what to do. 3 months or so, I have a lady now that her credit was whatever, was worse than 580, but she's been working for a year now. She's ready. She's
Mm-hmm.
ready, and she talked directly to the lender. And Wayne helped her tell her exactly what she needed to do. Her score has gone up like 140 points since then, and so now she's ready.
Yep. You said it. You hit it right on the head. Get with the lender. Don't try to fix it yourself, especially when you're close like that. Like she's saying, 550 above, 550 and above, get with the lender, because at this point, we're just trying to satisfy the lender. We're trying to make the lender happy. So the lender may tell you to go get a gas card, go pay off this bill, go do something, and you only think you just got to go pay off bills when there may be some other stuff you have to do. Go get this removed off your credit. You know what I'm saying? Like, it might be some things like that that the lender, once they look at your file, can give you direction. I always tell my people, where are we going with no direction? If you don't give me, when we hop in that car, if you don't tell me where we going, we finna sit here. It's the same thing. So when you go speak with that lender, the lender is gonna say, hey, do this, do that, do that. Now we have direction. Now we can actually, we got a plan in place, and we can execute the plan and then get you pre-approved and into your home. So that you hit that on the head, Lord. Stop playing around thinking you can do it yourself. And I'm not trying to say you can't fix the credit yourself, because you can. What I'm trying to say is you got to understand where you need to be mortgage ready wise if you're trying to buy a house. If you're just trying to get your credit score up, do your thing. But if you're trying to buy a house, let's see what it's going to take for that lender to be happy when it comes to your credit. The home inspection is a pass-fail test. Yep. So I like to prep my buyers before that home inspection, because we all know no home is perfect, not even new construction, right? We've had inspectors go in new construction and find just as much uncraftsman-like work and all of that kind of stuff than in an existing home. So when people say, should I get a new home inspected? I say it's definitely optional, but it wouldn't be a bad idea. You about to spend $400,000 or $500,000. Why not spend $300 or $400 to make sure you know what you're getting? To make sure you can address something before you actually buy that property. So I know I always have a conversation letting them know no home is going to be perfect. Our strategy is to go in here, figure out what's going on in the property, determine what items we feel are important and need to be addressed, and then let us do our job, which is to help or negotiate those things. But that's how I view the inspection report. Look at it like this: you just paid this man $300 to $400. He's not gonna come out of the house with a blank sheet of paper. He's gonna find every nail hole, every doorknob hole, every leaky faucet that he can find to plug in that report. So it shows that he inspected your house. But it's not to say that the house is a bad house, about to fall. fall down, anything. I guarantee you, some of you all stay in a nice house out there, a pretty house and all that. I guarantee you, somebody toilet upstairs just running. It just somebody faucet leaking. But it doesn't mean your house is bad. You just got a couple, deficiencies in the house. And it's okay. And that's how we address it. It's okay that we come back with things on the report. Let's figure out what are the important things.
Yeah, and talking about new construction not having any issues, that's a big myth, because right now on the news is these homes over in Stonecrest that were built. These people spent $400,000+ on a house, and they got sewage coming up in the house, the lady roof that fell in, and we'll get to this later, but people thinking they don't need an agent to represent them. When you go to these new construction communities, the sales agent works for the builder. So they allowed the sales agent to convince them that they didn't need a home inspection. Now your roof is falling in with sewage. Ew, in a $400,000 house. So, I mean, like you said, in the grand scheme of things, that $400 is worth it, versus what you're paying out for this house and now what it's going to cost, to fix it.
I was gonna say I'm going through that right now, and with the client, and I made sure I told her. I said, well, I advise you to get a home inspection, and I said, I know what they may have told you up there at the new construction place, but that agent works for the builder. They don't work for you. So I'm here to advise you. So if you choose that's not what you want to do, just know that I'm advising you to do that, and if you choose not to do it, that's on you. So,
Yep.
yep.
Hey, we got a question in the chat, but before we get to that question, just want to say I'm gonna plug in our Home in 30 Days link. So we ask that you all go ahead and join our Home in 30 Days Facebook group. It's free, no cost or nothing like that. We're not in there trying to sell you or get you to buy or sell. We're there to do just what we're doing now. We're by providing information so that when you decide you're ready to buy or sell, you can make an informed decision, and you know what to look for, how to negotiate, what to ask for. Of course, we're here to help you, and we want to be your agent and help you through that process. But this group is designed to give information. All right, so I'm gonna plug this in, and then, ladies, we got a good question in the group. The gentleman asked, been a home builder and building houses in the northern Atlanta area, looking to purchase a condo in Atlanta. Tell your best value area around the outside area of Atlanta. So, hey, I always tell it like this. It depends when it comes to what we consider, how did he word it, best value. Because best value is relative, I feel, to the person. And I'm not trying to just get out of answering the question, but everybody's going to have a value perspective, right? And this is what I mean by that. We had young clients that they wanted a condo downtown, middle of downtown, like, 20th floor. That's what they wanted. We got an older client that she wants a 55 and up community, quiet neighborhood, no traffic. We got some people say, hey, I live, work, and play on the north side of town, so I need to stay, north of Atlanta. So I say all that to say the best value is going to depend on what you need. And once we find out what you need, then we can recommend areas based on what that price point is. Because I could say Sandy Springs is going to be your best area for you, north of Atlanta, right outside of Atlanta. But will your price point get you what you want in Sandy Springs? It may not. So we might have to go up a little bit to, the next place north of that. Or you get what I'm saying? We have to look at it from that perspective of finding out what makes it valuable for you, and then we can recommend the areas based on the what those values are and price points and things like that. Anything I miss on that, ladies?
No, I think also too, just depending on, like you said, what it is that you want. And also because there's some areas south of right there, south of the city as well. There are building. They have plans to do a lot of building and making it very nice areas that's going to increase the value of those areas as well. So, like you said, it depend on your price point, depend on what you're looking for, it depend on the type of life you're trying to live as well. So you can decide what's going to be the best value for you because there are some up and coming areas that's going to be really nice in the next couple years.
Yep. So we definitely can get you that information, but we would have to dive a little bit deeper into exactly what you need. That's another thing that we do is take the time to understand exactly what you need. At the end of the day, our goal is to find you the best house at the best price and with the least amount of money and hassle. All right. And so in order to do that, we got to understand exactly what you're looking for. Once we do that, now we can get to work and put exactly what you're looking for in front of you. All right, so we definitely here to help you. If you want to just have a conversation with us to figure out, have a little bit more dialogue on like what you need, and then we can kind of make some recommendations from there for you. So you can just message either one of us, and we definitely take care of you. My monthly mortgage will be close to the home price divided by 30, divided by 30%. I think that question is to be funny, basically trying to say that a person doesn't know how to add up what their property, what their mortgage amount will be per month. And that's another thing that happens with people like on Zillow and stuff like that, because they'll say, well, I looked on Zillow and used the mortgage calculator and it told me my payments were going to be $2,000. But then when we go to the lender and the lender shops and gets them some insurance that's a little higher, they put a PMI on there that's another $200 when they
The correct
put
taxes, the
the
tax
tax of the
amount.
HOA. So when they do all of that and now it's not 22,000, it's 2350, you like, oh, well, how did that happen? The mortgage is made up of a couple different items. You have your principal, which is that mortgage balance, your interest that you're paying back, so that's principal and interest, right? Plus you got taxes that you have to pay, and you have to have insurance on the property, right? So those are other factors that add on to your monthly, because you're either going to pay them all in one or you're going to pay them over throughout the year, right? But then you also have your homeowner association fees if you live in that type of community. And for example, we had a condo community where the lady could qualify for the condo. She had enough to pay the principal and interest. She just had a problem paying the HOA because it was $800 a month. You see what I'm saying? She can afford, I think, I forgot exactly what it was, but let's just say, for example, if it was $2,000, she can afford the $2,000, but then when it became $2,800 because of the HOA, it created a problem for her. So just know that your mortgage payment, if you all are playing around on mortgage calculators, you have to make sure it's calculating principal, interest, taxes, insurance, HOA if applicable, and any other things that could be attached to your monthly payments that's due. What else on that, lady? What else I missed?
No, that's real good. Like get with your lender prior to, you can tell they'll be able to tell you based on this amount of house that you're looking at. So say you're looking at a $200,000 house, they can give you a more realistic estimate on what your monthly payment is going to look like versus going on Zillow.
Yep, and that's one of the
And
things that we do. Oh, go ahead, Laura.
no, I was gonna say too, it depends on the county as well, where you're moving to, because some counties' taxes and different things are maybe a little bit different. I know DeKalb County is one of the counties that have higher taxes, and I have a client who was dealing with that, and she kept looking on Zillow. I said, I know y'all love Zillow, and I know I'm not knocking them, but it's so much other stuff to consider because it was literally, like you said, almost like a $600 or so price difference from what Zillow was saying. And I told her same thing. You see the house. Matter of fact, you can take the exact house that you like and you can give it to the lender, send it to the lender. Lender would do calculations. They would come really close to exactly what your payments would be, if not the exact what your payments exactly would be. So just consider that as well, the different counties.
Gotcha. I think we lost one.
Who did we lose?
I think we lost Morris.
Okay, okay. Well, we were actually almost done. What was the
we're
last one? The
we're
last
way
one
over,
said,
y'all. This is supposed to be
I
7 to
know.
7:30, and it's 7:50 now.
We all excited. That's why. So really, it was only one last one, but what it says I can save money by not using a real estate agent. We already addressed that. So
Yeah.
yeah, we basically that was everything, Morris.
Okay. Yeah, yeah. Well, and just to recap on, I know I had dropped for a second, but I'll save money by not using an agent. Here's the thing with that, right? It's like going to court using the other person's attorney. Um, mo- so the real estate commission has come up with where we have to disclose our compensation, real estate agent compensation, right? So before we purchase a property, we're going to know how fees and things like that are being paid. What you will see most common out here is that the fees are taken in care of through the sale of the property, right? So not necessarily coming directly out of your pocket. There is being done through the sale of the property. So it's one of those things where you're getting somebody that's on your side in your interest, negotiating for you, looking out for things because they're from their experience of going through this process, looking out for things that can help you and to save money. You'll end up forfeiting all of that, thinking that you're going to get a better deal by just working directly with the seller who has no interest in you. Could care less about helping you in any kind of way. And actually, the other agent that's working with the seller has signed an exclusive listing agreement that promises the seller that they're going to try to get them the most amount of money they can. So why would you try to partner with somebody that's going against you when you can get someone that works for you to be paid by the seller? It just doesn't make any sense. And now, who you work with does matter. Meaning, don't just run out here and go get any agent because that can be a bad experience. Interview your agents. Make sure the agents are going to perform in the expectations that you are looking for. Make sure that agent gives you those expectations. Any agent that just starts working without letting you know how they're going to help you, you should be aware. You should be cautious of that because you don't know what to expect, right? So don't think that you're saving money by trying to avoid a relationship that actually can save you a lot of money. A lot of money is made and spent during negotiations of the due diligence period. That's where a lot of money is made and spent, right? So don't call yourself trying to go through a period like that alone by yourself. You going against two other people, another agent and a seller who has no interest in you at all. That's trying to get as much money from you as possible. So don't put yourself in that situation when you don't have to. All right. So I just wanted to throw that out there because some people have a belief that they can get a better deal if they skip having an agent, and that's not true. That's not true at all. You actually can come out worse because I've been in situations where I've had to save my clients from getting sued and things like that, that if they didn't have my protection could be in a worse situation than we are at that time. All right. So I just wanted to leave on that note. Anything else I miss on that?
Yeah, I was just gonna say, and then the relationship with your realtor for me anyway, extends beyond the closing table. So even after we've closed, you're in your house, like I'm still here to assist and provide. So we have a preferred vendor list that we send out to our clients. You know, things come up in the house that need to be fixed, need to be addressed. We can get you reputable people to help with that. I remind my clients every year, if you haven't done so, you know, file your homestead exemption. That's going to help lower your taxes every year. So there's just different things of value that we still add to you even after we leave that closing table.
That's it. You want to leave off with something, Lori?
Um, I feel like this has been a great Zoom today because I feel like that's something that definitely needs to be addressed, all the myths. And we definitely work hard to make sure you get what you need. We're not in this business just to sell a house so we can get a check. We're here to make sure you get what you need and that you're secure at the end of the day and that you have something that you can lay your head and a home for you and your family. So just know that that's what we do. We're not just here to get a check. We're here to make sure you get what you need. All right. Thank you.
Yep. All right, Lori, well, you enjoy that beach and that water, relax,
Jealous.
enjoy
Jealous.
yourself. We
Thank you.
we up here with all this pollen, but it's all good. It's all good. We blessed. We alive. We on live. You know, so that's a blessing that we up in here helping people. So I just want to say thank you all for joining tonight. Again, here's the link for our Facebook page, Home in 30 Days. Please go ahead and sign up for our link. Subscribe and like our YouTube page. What's the YouTube again, BJ?
So they can type in home in 30 days, Morris Wyatt, and it will pop up.
All right. So let's go, y'all. Look, we're here to help you all. We're actually giving up. Just think about this. We're giving up 30 minutes an hour every week just to inform y'all, keep you all up to date. And the good thing about this is we love it. We're doing this out of the kindness of our heart, and it's something that we just love and have a passion for. Again, we're not trying to sell you all, trying to get you all to work with us, or none of that. It's about providing information. And so, you know, that's what it's all about. That's what we love. This is our passion. And we're going to leave it on that note. So thank you all for joining us. Again, we'll see you all next Thursday in our private group, and we'll share with the group what we're going to talk about next Thursday. So if you're not in the group, sign up, join. And again, we love y'all. See y'all next week.
Bye. And also send it to your family members who may need this, cousins, because there's other people out there that need it as well. So don't be selfish, share it.
That's what's up. All right, y'all. Enjoy
All
the
right.
beach, Lord. All right,
All
BJ.
right. Thanks.
Thank you.